Hi guys, Harry Yotis here, professional trader for 20 years, started my career in 2005, and still alive and strong and kicking in 2026. Well, big news, peace in the Middle East. The Straits of Hormuz are going to open. Let the spice flow. Oil, that is. It's flowing through the Strait of Hormuz. At least that's what they're saying. The peace deal is happening as we speak. It's not 100% finalized. They're still going to meet. But we will talk about this and the implications to various assets and what I think going forward soon, okay? First, we talk about the technical picture because why, my. Today we finished Friday, April 17th, OPEX. Nobody noticed that this whole week is OPEX. And usually in OPEX, the market hovers sideways and does nothing and kills premium. But, obviously the fundamental picture will just overshadow that OPEX move. So boom, everybody's buying. Everybody's jumping aboard on top of themselves, jumping over dead bodies, pushing away their mamas and their grandmas to buy calls and to go bullish. So today we are Friday, April 17th, end of the week, and we finished up on the S&P 500 about 1.2%, okay? Guys, stick around to the end. I'm going to tell you exactly what I did today, my positioning, and what I think is going to happen going forward. But first, before we do that, let's talk about the technical picture. Come on. Do I even have to bring in the moving averages? You know what? I'm not going to bring in the moving averages. This is clearly bullish. Okay? You don't need anything on the chart. No indicators. This is a bullish pattern. Okay? This is the squeeze from hell. Look at this. V bottom destroying the shorts that got caught here. Very, very bad. Here we had extremely negative sentiment here, like extreme fear. Okay? And now we look good, okay? But the technical picture is bullish. We don't have to go any further than that. The sentiment, greed, third day of greed, getting there. 3 days of greed. The sub indices are starting to roll. We're getting there. And look, the put call options, just as we suspected, a lot of puts were being sold. I guess a lot of calls were being bought vis-a-vis the puts. We went into extreme greed. The 5-day rolling average of the put call ratio lagged this a bit, and as we suspected for the past 2-3 days, as we broke into new highs, extreme greed on the put call ratio. A lot of calls being bought, okay? Everything is going to cycle to extreme greed yet. Stock price strength, not there yet. We still have to make 52-week highs, and we'll get to this. This is what I was going to mention as one of my what ifs, or like a little something that bothered me today, a little pet peeve of the day. However, we are still in greed. We can get to extreme greed, of course. So far, 3 days of greed, we can spend weeks there, okay? So we have the fundamentals, as always, never turned bearish. They were always bullish. The technical picture is bullish, and the fear and greed is starting to get, worrisome, okay? Still bullish. So we have all three legs of the stools on our side, okay? Let's go to the peace in the Middle East. What happened? Iran declares Strait of Hormuz open to shipping, but Trump says U.S. the blockade is still active. I guess certain ships are blockaded, but others are not. I guess oil ships are not. Oil tankers are not. Okay, so what is this implication? Okay, the first thing we always look at when it comes to this peace in the Middle East trade after today is oil. Okay, U.S. oil, as you know, guys, I took a short around here a couple of days ago on the USO, but this is U.S. oil. Big down move. Like I said, let's bring in the moving averages for this one. Okay, like I said, once it closed below the 10, you could have gotten out once you bought the breakout. But usually, some people wait till it closes below the 20, which was this day right here, 8th of April. You probably were out of it. That was a good trade. You bought the breakout, sold here. You captured 80% of the move. That was beautiful. But I was suspecting that we were still in an uptrend, so it wasn't really. I was still bullish, but as the market was going up, this was the lagging indicator. Oil was holding through. After today, boom, down, okay? It fell as much as down to $78 a barrel. It came back, but if we look at the 15-minute chart, you'll see that as it goes down, this looks like a bear flag to me, okay? It cycled all of the averages into neutral for it to drop back down again. You're going to get these ups and downs, especially when you have such a volatile commodity like oil. You're going to have, big up moves, big down moves. Okay, that's volatility. It goes both ways. Okay, so I'm not worried. I think once this war is over, the market was telling you way before here, SPY. Market was telling you as this candle right here, let's get rid of the moving averages. This candle was the anomaly candle that the market was telling you that the war was behind him, because the market went up with oil going up. Okay, that was an anomaly. That was telling you that it was discounting oil. It was looking 6 months into the future. 6 months in the future, oil is down. And the market wouldn't be ripping if they think that the war is going to be sustained. Okay, it's going to be a short-term war. So that's why we initiated some shorts here, and I think they're going to pay off soon. Okay, so this is just like a bear flag in the 15-minute before going back down. I think we retest these highs, the 65 going forward, and because, you know, a lot of oil was being bought, we're going to return back to this fundamentally bearish move in oil, because the fundamentals of the Straits of Hormuz are open, are the same. We are awash in oil. The world is awash in oil. I wouldn't even be surprised if it goes below this 55. This spike up could have been the catalyst to take us below this 55 level. Who knows? We'll see, depending how much oil was being produced during this whole time. Okay, but for sure, I think we hit the 65, and very, very likely, very possible we hit the $55 a barrel going forward. Okay, it's just going to take time. It's a question of time. I don't know what it does intraday, not intraday. I don't know what it does in a day or two or a week or whatever in the short term, but I think it works its way down over time. Okay, that's oil. Okay, and remember, we also talked about the volatility of the market and the VIX. Okay, look, the VIX up. We hoped there would be something like this, a slow grind down after a big spike. Well, we had a big spike, tried to do it again, and now we're getting that big move down in VIX underneath the 20. You know, very, very bullish. Okay, I think we still go. I don't think we go all the way down, because, like we said before, the SPY, a lot of puts were bought. Okay, a lot of calls were being bought, especially at the breaks of the highs. And you have a lot of momentum chasers coming in CTA funds, which are just basically commodity trading advisor funds. They're just basically trend followers. Okay, if it's above the 200, you buy. If it's below, you sell, etc., etc. There's trend followers. Okay, so they're following the trend. They're piling on board. This V bottom got them caught short. They have to buy back and go long. Okay, so all of these factors going forward tell me that it's basically, chase the dragon, if you will. So, but okay, let me tell you guys right now, what I'm doing is I am cautious. Okay, I am cautious because this is a vicious, vicious move. Okay, so this is what I'm doing. This is my positioning going forward. I am net long, but I took some more short exposure here. I added some more short exposure. I added short exposure here. That's probably going to die. And I added more longer term short exposure here. Okay, because I have to add some negative deltas. I'm very, very long. So I'm just worried. Okay, and what I saw underlying in the market today on my watch list, even though the market was up like 1.2%, I'm expecting a lot of my stocks to be up 3, 4, 5. Some even 10% from depressed levels. They're not. Today was a very mixed day. I should have been up way more than I am. So it's telling me, like, under the hood, or I shouldn't say under the hood. Under the hood is very strong. But I'm saying the momentum, the buying pressure has already been like taken into account before today's down move in oil. Okay. So a lot of this move is already in. Okay. Sorry guys. That's the way it is. If you're waiting for good news, like you're waiting for the, Trump's deal, the Strait of Hormuz is open, and you're starting to buy here, big mistake. You have to buy here when there's no good news, okay? When the extreme negative sentiment. Okay? So that's why I added more short exposure. I believe we retest maybe the highs. Let's draw this line, okay? Well, we'll do it after. Not really important. I want to draw the line on the highs, but I don't want it to ruin with my peace in the Middle East sign, okay? So, I'm very, very cautious, okay? I'm still sticking with my oil shorts. I still think we work our way up, except right now, because of a lot of calls were being bought. This thing bothers me. Okay, this put call ratio at extreme greed, meaning a lot of calls were being bought. That bothers me. Okay, so I want to hedge my long exposure by adding some negative delta to my account, which I did. Okay, and another thing that I want to mention before going is Bitcoin. We haven't seen that in a while. What is it? BTC. Look at that. Okay, what we were suspecting here, we're grinding sideways underneath the 73,000 key level. Why? I'm going to keep saying it. Look, it's the highs from the 2024 highs. before breaking out. Okay, and it broke below, so that's going to serve as resistance. Boom, resistance, and now it broke above it. And today is the big day that it broke above it. I'm expecting it goes to the 90K level. Very reasonable move, especially after being depressed so much. And we had extreme negative sentiment in the extreme fear, if you will, in the Bitcoin and coin realm altogether. Okay, not just Bitcoin, but Ethereum, etc. So I think we go higher here. And my stock that I'm playing is MARA. It's already at 11. I bought the 10-15 call spread. I will get rid of it when it gets around to 15-16. Okay, I'm also holding a little bit of stock. Not that much. It's just a small trade because I am not super bullish Bitcoin going forward, because look, it's still in a downtrend. Even if it goes to the 90K level, it's still in a downtrend. Okay, so a big stock today, the MicroStrategy, look, that also went up a lot, like 10% today, 12%. So it's pretty much mirroring the image of Bitcoin. Okay, it's going to go higher. Maybe it's probably going to go to the 200 level. Okay, before this move is through. An outside move at 236. That's what the target I see for, which is the previous higher, for MicroStrategy. All based on my Bitcoin move. It depends on Bitcoin. If Bitcoin rips to here, the 90K, and MicroStrategy doesn't move, then I don't think it goes higher. Okay, everything's going to be based on my Bitcoin move. Everything meaning how I will exit my MARA long position. Okay, I suspect MARA gets around the 15 to 20 level if Bitcoin keeps ripping. Okay, so that's what I foresee going forward. Again, let's reiterate. This is a vicious move. Caught a lot of people short. This is why it's vicious, because it caught a lot. V bottoms are vicious, I'm telling you. I think a lot of the people who were caught short probably covered, and here they're going long. So I want to have a word of caution, okay? We are at all-time highs. When the market goes to all-time highs, I told you yesterday, that I expect a 5 to 10% move going higher, which is around the 750 on the SPY. We're at 710, okay, around 730 to 770. So 750 is my probably mid-price target, let's say, for SPY, because usually you get a 5 to 10% move in when the market rips to new highs. I'm telling you, there's an old trading adage: you don't short new highs. Okay. However, I added short exposure because I just think that this action tells me that we're going to come back somehow. We're going to have some kind of retest before going higher. I don't think we do this again. If we do, and God bless us, okay, we're going to be printing money. Okay, but I just don't think that we're going to continue this move, especially after seeing a lot of like weakness today, a lot of like tired stocks. A lot of the stocks here were tired today. They should have been up way, way more. Here, on this indecision candle where the market was up barely, okay, my stocks were higher. And so was a lot of the general market stocks that I look at. Here, they weren't as high as they were here. So I'm just saying it's getting tired. This move is getting tired. So don't go long now. I'm telling you, do not go long right now. Okay? In fact, I added short exposure. So I hope that explains everything, my positioning and what I think going forward, guys. Looking forward to next week. Crazy 2 weeks. 13% return in 2.5 weeks. Crazy. All right. See you guys next week. Later.